You're with NewsHour. So, was the Finance Minister Tito Mboweni's budget speech consumer-friendly? None of the major tax categories had increased, but the consumer still has to navigate through new increases in sin taxes, and an additional fuel levy is not going to help matters. Well, Francois Vivier of Capitec Bank joins us now via Skype to talk about how to be smarter with your money. Francois, thanks indeed for talking to us. First of all, banking shares not reacting too badly to the budget speech this week. Is it a budget that's going to strain banking clients, you think?
Good evening, Devin. Well, I don't want to comment on banking shares. I think what we really want to talk about is what's the impact of the people on the street, on the people of South Africa. And as you said, there's a fuel levy coming in, and there's really no relief for the average person. And in the end, what people need to do is balance their own budgets. And there's really only two ways you can do that, and that's by either increasing your income or your earnings ability or decreasing your cost. And what we want to do and talk about is how do you do that in practical terms through your banking.
So one of the tips is about probably doing something of what you call lazy money. First of all, what is lazy money, and what can you do with it, Francois?
Well, it's an interesting thing. I think most people don't realize, but the average current account or check account in South Africa doesn't pay any real interest. And there's currently about 295 billion rand that lies in call or current accounts in South Africa that doesn't earn interest. That's called lazy deposits. And if those lazy deposits were earning at least 5% interest, that would add up to almost 14.8 billion rand a year that would go back into consumers' pockets. So one of our first tips for people is to really look at their money and the bank accounts they're using to make sure that you use an account that offers you real interest, specifically on the daily balances, because that's often where consumers are missing out.
You know, you've also put through a tip on clients moving towards digital banking. I mean, are there still a significant number of clients that are not digital yet?
Devin, we're definitely seeing a strong uptake in South Africa on digital banking. There's definitely more data availability and more smartphone availability, but there's still a lot of people that are just not entirely comfortable with it. What we're doing, though, is from Capitec's point of view, we said, well, firstly, we need to help people with earning interest, and we offer very good interest on your daily balances, as well as 4 additional savings plans where you can put your money in. And that's really our second tip on the earning side, is to make sure that you automate your savings. You can set up additional savings plans, and on the day of your earning or salary, you set up a recurring payment into that savings account, and that automates it. It takes the thinking out of savings. So it makes sure that you start adding up your savings. On the fee side, it's important to look at your bank fees and to really understand it. Most people for a bundled account pays 105 Rand on average. And the question really there is, do you really get the value for everything that you pay? You know, in most cases, there's a lot of added benefits and loyalty points, but who really uses all of that? And you have to ask yourself and scrutinize your bank statement and say, am I banking with a bank that offers me the best value? And then the last tip is to bank in the best way, to use digital banking. And that touches on your question. So what we've done at Capitec is we've significantly reduced digital banking fees. We've taken electronic payments down to 1 Rand. We've taken debit orders down to 3.50 Rand. And we're pioneering immediate payments on electronic channels at 8 Rand per transaction, which is significantly lower than the industry norm. And what we're telling with consumers there is that we're motivating you to use your phone, whether it is the app or internet banking, to make your payments, to draw statements, to check balances, to open your savings accounts, really to manage your money. And that's the better way to bank. Now, it's going to take a while, I think, for the broad South African base to pick up that behavior, but we're seeing that grow very quickly in our client base, and we're really motivating that from our side with our pricing.
There is still some fear around digital banking, though, Francois, but I want to put this question to you. I mean, just in terms of responsibility of lenders like yourself, I mean, it's at a time where clients are being strained, times are hard. How you dish out lending is also very important at this stage. I mean, we can't be giving people money who simply would strain their budgets even further. What is the criteria that we're looking at here?
Devin, we use very specific criteria when we evaluate credit. And we look at a person's, firstly, at their affordability. So the stability of their income and their source of income, their salary, as well as looking at all of their commitments and their expenses and see how much credit can they afford. Then we also look at their behavior, their past credit behavior and their past banking behavior. And that gives us an indication of whether this would be a responsible loan. But more than that, we are actually motivating and educating our clients to say there are responsible ways to use credit. There are things for which credit is very good. If you use credit to fund an asset that appreciates in value, or to fund education for your children, or to fund transport to allow you to get to work, those are good uses of credit. And that's a reality of living. But if you use credit to fund consumption spending, to pay for a holiday, to pay for a party, that's the kind of behavior that we think people should be very wary of. And we try and educate people on that as far as possible.
All right, I'm going to leave it there. Thanks very much indeed. Francois Vivier of Capitec Bank talking to us there about how to navigate your way through some of those increases we've seen in the budget. Now,